From Bloomberg World Headquarters in New York to our audiences worldwide, I'm David Weston. Welcome to Balance of Power, where the world of politics meets the world of business. And we start once again with the markets. They're swinging around today, but really solidly higher at the moment. Joining us is Taylor Riggs. Do I get my hopes up 2 days in a row now?
I know. So we haven't seen back-to-back gains like this in more than a month. So typically when you've gotten a solid rebound, we always fall the next day. I don't want to make light, but in sometimes around these tumultuous times, we can try to make light of an otherwise very difficult situation. So a trader note was laughing this morning, saying that he was shocked to wake up that futures were higher. We did hold on to the 2018 December lows in the past few days. That was a very key technical point for the S&P 500. And then more importantly, those small cap domestic stocks, David, the Russell 2000 had been hit much more than the major averages. They don't have perhaps the financial flexibility that some of the big multinational corporations have. Those are leading the gains today and recovering at the peak of the losses off more than 41%, and now only off about 35% or so from those record highs.
And even as you're talking, the Fed now has made another move. They're expanding their credit facility to include muni debt, municipal debt, which has been talked about as a possibility to try to support the municipal bond market.
So, yeah, this is interesting. There was a lot of talk on there. Again, the muni market in general is much more illiquid than the rest of the market. It's always been known for having a lot of trouble. So not surprising to see then in a week like we've just had that stress there was showing up even more and more. I was talking to a lot of muni traders on the desk. They continue to say that there are some short-term issues, but there is a lot of issues going on the long end. And I believe that in previous laws, the Fed could buy munis up to 6 months. This now expands it to longer dated maturities, where you're getting a lot of that illiquidity on the 10s and further out on that yield curve. Also, they had record outflows, according to Lipper, as of yesterday. So I would imagine that perhaps this gives a little bit of some confidence down those money market facilities to also now include some muni debt.
And back to equities for a moment. What about all this talk about bailouts? Because right now there are negotiations as we speak about what to do. There are proposals, for example, for the airline industry. What is that doing to equities right now?
So some of the major ones, $1.4 trillion, $750 billion coming from the Manufacturing Association, the restaurant, and some of the other travel industries. You go further down that list, airline companies asking for $50 billion. The pushback I'm getting, Jeff Gundlach tweeting, the problem with that $50 billion, they engaged in $45.5 billion of share buybacks in the past 10 years. So there could be some political ramifications. Mohammed El-Arian, though, saying this morning, the key goal for Congress, you have to deal with A, national security, and B, job loss. Those are the two key goals. The political stuff, you'll have to deal with secondary.
Terribly important goal, but you have to get past Democrats who remember well the last bailouts, which is a problem. Taylor Riggs, thanks so much, because I want to continue that conversation on the telephone right now with us is Isaac Voltansky of Compass Point Research and Trading. Isaac, there's a proposal up there that apparently has been worked out by Steven Mnuchin, the Treasury Secretary, with Mitch McConnell, the Majority Leader. That's on the table. They're writing up right now, but we're starting to hear some pushback from Democrats on things like what Taylor just talked about. If you're bailing out these companies, what restrictions are you putting on them?
Morning, David. Look, I think it's wonderful that we finally have a proposal that both policymakers and market participants are able to dig their teeth into and start talking about. But I think it's important for investors to be cognizant of the fact that there is still a considerable amount of political posturing, headline volatility, and horse trading left before we have a final deal. Luckily, a lot of that should be done over this weekend, so we won't have to watch every headline, given the markets won't be open.
Well, I guess that's my question, Isaac, maybe an unfair question. How long does it take to get that horse trading done? Because when you start talking about bailouts and giving real cash, whether it's the airline industry or hotels, others, that can get pretty complicated. Are they going to restrict how many employees they have to maintain? Are they going to restrict executive comp? Are they going to restrict stock buybacks, things like that?
The simple answer, David, is yes. And I think that when you read the bill that was released by Senator McConnell last night, it can be described, and I think fairly so, as business-friendly. And Speaker Pelosi and Senator Schumer have both come out and said the proposal needs to become, quote, more worker-friendly, unquote. And so what does that look like? I think that looks like bigger checks in the cash payment category and a whole lot of restrictions on the bailout provisions for airlines and other industries. When I talk to my clients about how long this is going to take, I think even if they move at warp speed, David, we're going to have to wait until most likely middle of next week before we get a final passage to the president.
Now, of course, we've heard both from Secretary Mnuchin and from the Majority Leader, Mitch McConnell, that they want something for the president to decide on Monday. Are you saying you think that, as a practical matter, is unrealistic?
I think it is. I think it is a proper goal for all of the stakeholders to have right now. But from a practical perspective, this bill needs to change materially in order to get Democratic support, both in the Senate and, most importantly, in the House. And I think that's going to take another few days of political posturing and horse trading.
At the same time, what kind of pressure are the members of Congress, both in the House and the Senate, going to feel here as we see increasing layoffs across the country? We've seen thousands of people now already losing their jobs. That's going to get worse. And everyone says time is a wasting. We don't have much time to try to address this issue.
Look, there's a palpable sense of urgency on Capitol Hill, and I think part of it is the realities of the economic impact of coronavirus and the job losses that are very clearly on the horizon. Not to mention that those members themselves want to get home. So I think those two things are combining in order to create a sense of urgency. I'll say this, David. I'm struck by the fact that, look, we could argue that policymakers haven't cared about deficits for years, but they definitely don't care about deficits right now. So I'm optimistic about a final deal, in large part because everyone will get to hang their ornament on the Christmas tree, and there will be a big deal that is passed in the middle of next week that hopefully makes everyone happy and lets the lawmakers go home.
So, Isaac, I'm really happy you took us there, because that was really going to be my question as a practical matter. Secretary Mnuchin is talking $1.2, $1.3 trillion, something like that. As a practical matter, are we going to say all the above, and that number will go up significantly? As Democrats say, we want something for the homeless, we want something for the poor, we want something for unemployment insurance, things like that.
I think that the way that the deal gets across the finish line is by buying off every major constituency there is, which is why, David, we've seen so many last-minute proposals from different industries and different stakeholders, because they view this as a must-pass legislative vehicle, and perhaps one of the most important legislative vehicles that we're going to have during this crisis. I can tell you most of my clients are already starting to ask, what could a phase 4 deal look like? So from a market perspective, I think there's excitement that this will get done. There's some concerns with specific provisions. How does the SBA lending work, and so on and so forth. But from a market perspective, there's a belief that there will still have to be yet another round of legislating for a phase 4 bill in the weeks to come.
Isaac, some of those specific questions, like the SBA lending and things like that, could be terribly important in terms of how long does it take from the time the president signs something, assume they get something done next week, he signs it, to when people actually have cash in their bank account?
I think that there is a chasm between the rhetoric and the reality from a cash infusion standpoint. First and foremost, on those individual payments, it is difficult to imagine all of those payments getting out as quickly as Secretary Mnuchin has stated he hopes for them to be delivered. There are questions about how the means testing would work and whether that would further delay those payments being sent. There are also questions about the physical check versus prepaid cards versus direct deposits, things that are tough to answer even when everyone is working at the office at Treasury and IRS, which is not the case. On the small business side, it's a huge number that they're throwing out, David, $300 billion. But you still need to get the banks to actually lend that. And that takes bandwidth and underwriting time.
So, Isaac, give us a sense of who's working right now in Washington. And as I understand it, in order to get this through the Congress, for example, they have to bring 435 members of the House, or at least a substantial proportion of them, back to Washington. Even if they don't get together in one group, they have to be in Washington to vote. Are people up there on Capitol Hill working? Are they working from home? How is this working?
All of the members are going to have to be here for this round, David, as well as their staffs. And the question that I think we should be asking once this phase 3 bill is done is, are they going to want to come back to D.C. in a month if we have to pass yet another bill? And at that point, how do quarantine dynamics and other elements come into the conversation, which is why you're hearing more and more about remote voting as a potential if the situation calls for it in the next round.
Okay, Isaac, thank you so much for joining us today. That's Isaac Boltanski. He is at Compass Point Research and Trading. And we turn now to Ritika Gupta because she's here with Bloomberg First Word News.
Thanks, David. New restrictions are coming regarding travel between the United States and Mexico. The two countries have been working on plans to limit cross-border traffic as they try to halt the spread of the coronavirus pandemic. Officials say it's important that cargo and trade continue and that healthcare workers are able to cross the border. But tourism and some recreational activities will likely be curbed. Similar restrictions are in place between the U.S. and Canada. Germany is considering sweeping measures to support the economy and help companies deal with the impact of the virus. German media report Chancellor Angela Merkel's ruling coalition will create a fund worth $538 billion to provide firms with loan guarantees and cash injections. That as the nation braces for a possible lockdown as soon as Monday. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. David.
Thanks very much, Ritika. Up next, we're going to take you inside the negotiations to get a stimulus package for the American people. Republican Senator Mike Braun of Indiana is our guest next. And this is Bloomberg. This is Balance of Power on Bloomberg Television. I'm David Weston. Senate Republicans have now unveiled their version of a third virus aid package. It includes tax rebates of $1,200 for individuals and $2,400 for couples, at least up to a certain income limit. Senate Majority Leader Mitch McConnell says he wants that bill passed and ready for the president's signature by Monday. Joining us now from Capitol Hill is Senator Mike Braun. He is a Republican from Indiana. So, Senator, thank you so much for taking time to be with us today. Give us your sense of where this package stands right now. Is it realistic to have something for the president by Monday?
I think so. I think when Leader McConnell gets behind something like this, that urgency is real. We've been stewing on this national anxiety surrounding coronavirus for a good while. As I get input from back in Indiana, many businesses that have been relatively unscathed, they say next week will be much different. In 2 to 3 weeks, the ripple effect from the businesses that have been shuttered and their employees not working will even have a magnified effect. So I'm one of the most fiscally conservative individuals in the Senate. That's something we talk about and we need to down the road. Here, the American public expects us to do something. It was created by our effort to tamp the disease down from the experts that know best. And I think here in 7 to 10 days, after that 14-day stretch, we even need to look at that because the Wall Street Journal had a good article out there. I did a floor speech last night that stresses, let's make sure all along the way we're making the smartest, right decisions. And yes, we need to get this disease tamped down, but we may need to tailor our approach based upon the density levels of places and everything we've learned along the way so that we don't kill the economic patient while we're trying to cure the bug.
Yeah, so, that's a big challenge, no question about it. You're a fiscal conservative. You're also a business guy, so you understand what this can mean for business. Give us a sense of what might stand between us and getting something as early as Monday done, because one of the concerns we're hearing about is on the so-called bailouts, money going to corporations, money going to companies, having at least some provision that says you'll keep employing people the way you were, that you won't pay your executives too much money. Is it appropriate to put that in, and will it bog it down?
I think the preference of many of us would have been to do that in the next step, but in these industries that are being discussed, even along with that discussion, well, they did buybacks of their stock, which if that hadn't occurred, they'd be in a more cash-rich position. Everything that has occurred, think about it. 2 weeks ago, we were riding the healthiest economy that the nation's probably ever had, and everybody agrees with that. In the span of this short period of time, we now are looking at unemployment levels that you never could have imagined. So government created the issue, and I think it was because we were scared about the disease, and rightfully so. We need to just make sure that we take a deep breath, that we keep focused, learn from all the data that we're accumulating about the disease itself, but it is urgent. We need to set the quibbling aside, get this out the door, and then make the right decisions here in 7 to 10 days, whether we need more of this. Many people I speak to think that we'll have to modify the approach of shutting more places down, because then it's going to tank the economy and not necessarily help what we're doing to tamp the disease down. So it's a tricky combination.
So I infer from you say, Senator, that you would be opposed to a nationwide shutdown the way we've seen, for example, in Italy and elsewhere. You're saying that would be too much, it might put the patient under too much stress.
I think it would, because we're a lot different. A lot of our country is socially distanced anyway by low population densities. Clearly, dense population areas have to take a different approach than maybe the rest of the country that isn't. But I think we follow the expert advice as we have through that 14-day stretch. And then everything we've learned about the economic impact and how we're tamping down the disease needs to be put on the table. And if we need to reposition, we need to be able to do it. The classic sign of when you actually tackle something and solve any problem is that you're flexible along the way, take all the accumulated information and make the right decisions.
How do you make choices right now? As you say, we have to be flexible down the road, make adjustments. But right now, what you're working on right now for Monday, how do you make choices? For example, you have various industries, the airline industry, hotel industry, cruise line industry, who's saying we need cash, we need it right away. On the other hand, we also hear small and medium enterprises are critically important on the employment issue, which may be the key issue. From your point of view, understanding the economy the way you do, what is the most critical point to address?
First of all, definitely the small businesses and the blue collar and middle income workers that have been displaced. That needs to be our focus. That's why I was for maybe an enhanced unemployment insurance system, but we have 50 different states with 50 different ways to administer that. I still think that needs to be done. But when it comes to the larger companies, many have a credit facility, and many have cash balances, but even those will be stretched if this thing persists into a month, let alone 2 months. So I think that part of that will happen in this package, because we're not going to be able to pick and choose. It's going to be largely crafted by the folks that are at the table right now, and it won't be one of those that we can be 100% happy with. The urgency is that we get this out, see what happens with it, but be very careful in 7 to 10 days that we're not coming back here with that same approach if it's not working, as well as looking at what we do with the healthcare component.
One of the issues is it's got to work now. Well, the economists tell us it's got to work right now, because we're seeing the effects right now. So as you look at the various alternatives, besides picking which places to put the money, do you choose based on how fast that approach will get money into people's pockets or bank accounts?
And I think that's a legitimate question, and that's why I believe when we get a little farther down the trail that we're going to see maybe and we're moving at the speed of light for government here, and even in the implementation of it, that may not be quick enough, and that's where I think we got to size up what we do here in 7 to 10 days, because that's about as much time as we're going to have for some of these businesses that have already been shuttered, for people that have been out of work. And then we might have to take a different approach. I think what we're doing today is the best that we can come up with, and hopefully it is going to work, and we shine in the best we ever have in terms of implementing it. Watch it carefully here in a week to 10 days, make sure that's working.
And Senator, even as you've been speaking, just within the last few seconds, Governor Cuomo of New York has come out and said that 100% of the workforce in New York must stay home. As you know, he first said 50% have to stay at home, then he went to 75. Now he says it has to be 100% of the workforce. Given where we are in New York, because we do have an awful lot of cases here, is that understandable to you?
I think that each governor is going to know the lay of the land, and I think that should differ by state. I said it earlier, where you've got the preponderance of the cases, you're going to need to treat the medical health care component with more severity. California doing it, where it's a big state that, you know, it's more rural than it is populous. That's concentrated in a few areas. I think Governor Newsom probably got ahead of the game there, and that'll differ by all 50 states, and I think the governor's having the latitude to do it. even there, they will have to measure, are we tanking the economy to the point to where you might have to relax a little bit on the healthcare component, but I think he's going to know best. The healthcare experts are going to know best in the meantime, and that all of us take a deep breath and be willing to be flexible here in a few days.
Okay, Senator, I really appreciate your being with us today. That's Senator Mike Braun, Republican of Indiana, at the Capitol. In the meantime, we want to repeat that breaking news. New York Governor Andrew Cuomo has now said that 100% of the workforce in the state must stay home. Only essential businesses may operate. More on that coming up. And this is Bloomberg.
Essential business and an essential workforce. When in public, social distancing at least 6 feet. Outdoor recreation.
This is Balance of Power. I'm David Weston. We come back now on that breaking news. Governor Andrew Cuomo of New York has just announced that 100% of the workforce should stay home, and he will enforce that apart from essential businesses, essentially. So once again, New York has shut down. 100% of the workforce should be staying home. And now we're going to turn to Kaylee Lyons to explain what this is doing in the markets. We had a second day in the green. It's not all red yet, but it seems to have come off a bit.
We are definitely right around the lows of the session. The S&P 500 dropped pretty sharply on that headline. We're now down about 0.7%. Granted, it's going to be a volatile day. It is quadruple witching. We have 23 million options on the S&P 500 expiring, so volumes, volatility are higher. But it just shows you that every single incremental update when it comes to the coronavirus and the extent to which this shutdown is happening all across the U.S. does strike some fear into the heart of the market. Of course, last night you had Governor Newsom ordering a shelter in place in California. That is a $3 trillion economy, plus New York City, the Manhattan area, and really the tri-state area. The more that becomes restricted, obviously, that has a massive economic impact as well. And I think the markets are competing with that idea, that economic impact, against some of the idea about all the liquidity and stimulus that's being pumped in by governments and central banks.
Where are we in volatility? We were up into the 80s at one point. We're back down to the 60s. How are we doing with volatility these days?
We've come down a bit, but I mean, these are still extraordinarily elevated levels. And on volume, I would just say that right now, volume on the S&P 500 is about 65% above where it's been over the past 30 days. So there are a lot of trades happening, obviously, right now, trading more to the downside, but we'll have to see how this session shakes out. Okay,
Kaylee, thank you so much for that report on the markets. That's Bloomberg's Kaylee Lyons. Up next, President Trump yesterday joined with Prime Minister Trudeau to close the U.S.-Canadian border. We get the perspective from both sides of the border, from Michigan Congresswoman Brenda Lawrence and from former U.S. Ambassador to Canada. He is Bruce Heyman. He's the author of a very successful book on the questions of U.S.-Canadian relations. We'll talk about what it does to the U.S. economy and to Canada. Live from New York, this is Bloomberg.
Why we're taking these actions. Now,
this is Balance of Power on Bloomberg Television. We are listening now to Governor Andrew Cuomo of New York because just a few minutes ago now, the governor announced that 100% of the workforce in the state of New York should remain home. That's apart from essential services, of course. He had earlier started with 50% should stay home, went to 75. Now it's 100% of the workforce, similar to what Gavin Newsom, the governor of California, did late yesterday. And now we want to turn to Bloomberg First Word News. For that, we turn to Ritika Gupta.
Thanks, David. The coronavirus pandemic has claimed the lives of more than 10,000 people, and the spread of the virus is picking up speed. The World Health Organization says it took 3 months for the first 100,000 cases to appear, but only 12 days for the next 100,000. The number of dead in Italy surpassed those in China, which again reported no new cases in the outbreak's initial epicenter. In Iran, leaders marked the Persian New Year by vowing to overcome the coronavirus pandemic and build up the economy. The upbeat tone came despite the announcement that 149 more people died from the virus overnight. The country's death toll is now more than 1,400. Nearly 20,000 people in Iran have contracted the virus. President Hassan Rouhani has defended his government's response to the outbreak in the face of widespread criticism that officials acted too slowly and may have even covered up initial cases before infections rapidly spread across the country. California's 40 million residents are waking up today to a statewide lockdown. Governor Gavin Newsom is asking Californians to stay home indefinitely and venture outside only for essential jobs, errands, and some exercise. Newsom says he doesn't expect police will be needed to enforce his stay-at-home order, saying social pressure already has led to social distancing throughout the state. Russian President Vladimir Putin won't give in to what the Kremlin sees as oil blackmail from Saudi Arabia. It's a sign that the price war that's roiling global energy markets will continue. The clash between the two former OPEC allies threatens to push the price of a barrel below $20. Putin's government has spent years building reserves for this kind of crisis, and Bloomberg has learned it's confident it can hold out longer than Riyadh. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. David?
Thank you so much, Ritika. Well, today it's Governor Andrew Cuomo of New York saying 100% of the workforce has to stay home. Yesterday it was Gavin Newsom of California, as Ritika just told about. But also yesterday it was President Trump joining with Prime Minister Justin Trudeau of Canada, shutting down the border between the United States and Canada, the longest land border, I believe, in the world. We're going to welcome now Bruce Heyman. He is former U.S. Ambassador to Canada, and he's also the author of the best-selling memoir, The Art of Diplomacy, Strengthening the Canada-U.S. Relationship in Times of Uncertainty. Well, welcome, Mr. Ambassador. It certainly is a time of uncertainty. Give us your best sense of what led to this closing of the border yesterday.
So my sense is, like every leader, whether you're a leader of a country or a state or a city, you're looking to protect your citizens and your residents. Justin Trudeau had to do that and had to prioritize that. And so no new entrants coming to the country. But he also had to balance out the fact that he had an incredible relationship and an intertwined relationship economically with the United States. So he needed to continue to keep business and essential travel continuing to go back and forth between our countries. And he needed to do that at a time where there's a lot of anxiety in Washington and mercurial president and the way he behaves at times. He had to thread that needle as well. And I think he effectively did that this last week in protecting Canadians from any new entrants, same time keeping the economy strong and going where needed, where goods and services need to move between our shared border, medical equipment, health care, et cetera. And he did it in a way which was collaborative with the president. So I think he was incredibly successful in this phase of that border tightening, which is taking place.
Bruce,
not closure, but tightening.
Bruce, at the same time, I want to come back to that tightening versus closure, but at the same time, it must not have been too hard to sell, was it, with President Trump? Because thus far, President Trump has said he really likes tariffs and he really likes closing borders. So he has an inclination, when in doubt, to close the borders down.
I don't know how hard to sell it was. I think the original conversations came from Chrystia Freeland, who's now the Deputy Prime Minister to Vice President Pence, and then that dialogue took place. But I think this was Canada's initial, foray here. This wasn't the president or his team thinking about our borders in that way. And I think that it was the right thing to do, only because, look, our behaviors up to date have been lagging and acceptance of how serious this crisis is. And the Canadians are watching over the border very carefully. They're also watching how we behave. And look, I just want to say this, what happened with the news of our senators potentially trading on this information in advance of it, I think is reprehensible. And look, as a former partner of Goldman Sachs, as a former U.S. ambassador, I always said, not only do what's legal, but you need to do what's right. People are dying. We're in an environment where people are losing their jobs. We're in the deepest crisis. And people should be held to the highest of all standards of putting the people first, not themselves. And if this took place the way it's being reported, these people should be held accountable. This is also happening at the corporate level with CEOs and what they're doing. It's being held at a different level. I think this is bigger than a virus pandemic. I think we're going to also have a corporate pandemic and a political pandemic. The leaders will surface, and people who do what's right will be defined in this time. And people who don't will pay a price for it when this crisis is over.
Well, particularly elected officials, at the polling place, if in fact this story does prove to be true, as you say. Let's go back to your distinction between tightening and really shutting it down, the nature of the closure of that border between the United States and Canada, because there are reports that, first of all, goods will pass so we can keep the supply chains open. Secondly, work visas will be honored. And third, that they'll be fairly liberal on what business travel is. How much are we really going to be shutting down? The more I read about it, the less I thought that they were shutting down.
So it's about discretionary travel, and the language that is being used when we come up with this final agreement between our two countries, I think will be important, but also will show flexibility. Look, my experience, we have 120 border crossings between Canada and the U.S. Some 400,000 people cross that border every day in normal times, and about $2 billion worth of goods. And so it's about balance. But I think you're right. I think a lot of people have already reduced their international travel. In fact, the U.S. State Department came out with a warning yesterday, which basically said at level 4, nobody should be traveling internationally at all. And so this is a unique point in time. But I think that what we did was, at least with Canada and the U.S., we've preserved the relationship as we've tightened the border.
Well, and give us a sense of that, because you really know about this terribly well. We just talked to Senator Mike Braun of Indiana, and he was saying, okay, we have to shut down a lot of the economy to fight this virus. At the same time, you don't want to go too far, because you could kill the patient, actually, and trying to save the patient. Give us a sense of how vital that passing of goods and people across the border with Canada is to the U.S. economy.
Well, millions of American jobs depended upon the relationship with Canada, but understand, Canada is incredibly sophisticated in terms of life sciences and work in drugs and using things that are going to be important for life-sustaining measures, even when we're not working here. So they also supply energy. And if you're in New York and you're even at home and flipping your lights on, some part of that energy is coming from Hydro-Quebec. And some part of the energy is coming from, out west in Canada into the middle part of our country. So whether it's fossil fuels or hydro or, wind, it is something we rely definitely on. So it's a very interlocked relationship, but Canadians also need our food and need the various things that we provide.
Okay, thank you so much, Bruce. Really appreciate you being with us. That's Bruce Heyman.
It's a pleasure.
He is former U.S. ambassador to Canada and author of the best-selling memoir, The Art of Diplomacy, Strengthening the Canada-U.S. Relationship in Times of Uncertainty. Now I want to go to the other side of the border now, back over to Michigan, my home state, and a congresswoman who serves Eastern Detroit, essentially Brenda Lawrence. She is a Democrat from Michigan, and she's coming to us now over the telephone. So, Madam, thank you very much for joining us. First of all, let's start with what we were just talking about, the closing of the U.S.-Canadian border. How does that look from your constituents, for example, in Southfield?
So I represent the city of Detroit as well, and I have almost every healthcare system in my district. There is a tremendous amount of travel from Canada to the United States in our nursing career path. And so when we talked about closing the borders, there was an immediate response and a crisis, because we need those nurses to provide the health care that, as you now know, we're in a crisis. So the health care, the jobs, people going back and forth. It's the second highest trade center border in the United States. And so we have a very high sensitivity. Our auto industries are so connected, the Canadian Ford and GM plants and the U.S. and the parts. So we are very, very concerned about the closing of the border, what it means to our economy, and most importantly, it is the healthcare workforce that is very critical.
Well, that's a terribly important point that, frankly, I hadn't focused on. I was focusing more on the auto industry and the parts coming back and forth. But give us a sense, if you know exactly how much of the border will be closed, because there are various reports coming out saying work visas will be recognized, goods can pass back and forth, and in fact, business travel even will be allowed fairly liberally. So are you reassured that, in fact, it will not interfere with some of the things you're talking about?
Well, that's what we needed to hear, because we responded immediately, and we received a response back from the State Department, from the White House, that work travel would be allowed, business travel, and so that for us, and the parts for going back and forth. But as you know, the auto industry now in the U.S. has shut down. So the critical issue was the movement of the nursing workforce or healthcare workforce.
So let me move on now to the proposal that's coming from the administration. It's being worked out on Capitol Hill for a massive spending package now to try to blunt some of the economic effects that are coming our way very, very quickly. Where are you on that package? What do you know about it? What do you support? What do you have issues with?
Well, you know, there is a proposal that everyone will get a check. The concern with that is it's $1,000, and that people who are losing their jobs we have to match that stimulus with stopping all of the foreclosures, evictions, turning off the water of the utilities, so that quality of life that can continue, because this is no fault of the worker or the citizen. It is the result of us having to fight an epidemic. So that is something that I'm very focused in on. Yes, the $1,000 will help economically, but we have to ensure that people, the banks, the utilities are not punishing people during this time. One of the issues that I have received from my small businesses, that this emergency business loan that will be available to the small businesses, we have to ensure that it's processed timely, that we are ensuring that the loans are going to the right people in a timely manner, because this hit has been almost instant.
Yes.
And people are not prepared for it. So that's something, the small business loan is extremely critical. And this is the other part that's a total unknown. If this virus peaks, which I pray it does soon, and we can start anticipating getting back to some form of normal, 6 months sounds reasonable, but we don't know that. And so one of the things that I'm interjecting into the conversation is not make that hard line of 6 months. So if I'm a bakery and I have opened up my bakery and I've built a clientele, and now it's shut down and people aren't coming, and I have to reopen, rehire in some cases of jobs and train, is the 6 months a sufficient amount of time?
Yeah, that's a very, very good point. It has to be immediate, and how long does it go for? But let me ask you one other question. A lot of concern about employment. An awful lot of the people working in the United States are employed by small and medium-sized enterprises, not by the big companies. Would you favor some condition put on those loans to small businesses that say you cannot cut your employment staff by more than a certain amount?
Absolutely, and that is one that we are already, I sit on appropriations and making sure that if you are a city and you're getting community block grant, you cannot be shutting off water. If you are the funds for the small business, you can't lay off all your workers and buy real estate or something like that. We're putting some restrictions on this. As you know, we were insulted that the last airline industries and others were buying stock and not helping the employees. We must help the workers, and that's a top priority. And in return, we want to stabilize the environment, the workforce, and stabilize the economy, but we have to take care of the workers.
Yeah, you have an awful lot of work to do. Really appreciate your taking time to be with us. That's Congresswoman Brenda Lawrence, Democrat of Michigan. Coming up, we are now waiting for the daily briefing for President Trump and his virus task force. We're going to bring you that as it starts. This is Bloomberg. This is Balance of Power. I'm David Weston. The Fed has just expanded its money market facility to include municipal debt. It's the Fed's latest move to fight the economic fallout from the coronavirus. Joining us now on the telephone is Ira Jersey, Bloomberg Intelligence U.S. rate strategist. So it's not a day that goes by that we don't have a Fed move or two, Ira. Give us the significance of really expanding this muni facility.
Yeah, so the muni, so it's really not a muni facility. I think that might be coming in the future, along with maybe some kind of facility for corporate debt. But this is basically an expansion of the what's called the commercial paper financing funding facility, which basically allows short-term debt instruments to be funded by the Fed. So basically, it gives holders of money markets the the knowledge that they're going to be able to get to fund their positions if they need to sell them or if they have any outflows from their participants. So it's important, but also probably not the end of any kind of stresses for the municipal bond market at all. There has to be more to be done.
But does it increase the liquidity in the municipal bond market as a practical matter? Because it allows...
No, it doesn't, because the problem is this is only for short-term debt. So this is only for debt that's less than a year, 6 months, or 6 months of maturity. So yes, it helps a little bit, but again, like you look at what's gone on with 5-year and 10-year municipal debt, and across the spectrum, and it's still significantly wider and hasn't tightened very much today, even with the market doing a little bit better.